Hey guys, we've had a little bit of movement in mortgage rates this week as reported in the media, but just bear in mind that this is banks' advertised rates and we've had negotiated rates at this level that we've been talking to on these videos for the past month or so. At the moment, the best one-year rate is 5.59 and we've got a new low for the two-year rate, which is 5.29. It's getting closer to that 5% mark that I'm hanging out for, but we're not quite there yet. In international news, we've obviously got a new president in the US and in terms of the Donald. That, I think, has been the driver behind a slight spike in wholesale interest rates. And so really, look, I wouldn't expect to see too much movement from here, and certainly not much negotiation below those rates that I talked to just before until the OCR change, which is coming up on the 19th of February. Now, as I've said to you guys before, in the lead up to those OCR changes, we've seen banks dropping rates a bit, like we're seeing at the moment, but then being slow to drop rates further post OCR. So don't expect on the 19th of February for banks to suddenly react and drop rates. It's going to take a couple of weeks after that for those rate changes to come through. So my advice at the moment would be, if you've got the chance to go onto a floating rate because your fixed rate's maturing, or you've got a new loan and simply settle it on a floating rate, I'd do that. And then I'd look to fix in the first week of March. Now we are getting to the bottom of the interest rate cycle, at least I think, and we'll see rates sort of in the high fours over the coming months. I don't think they'll get a lot lower than that, but of course it's not a perfect science, and so what I'm discussing with people now is splitting your loan and having a couple of different options in the mix, maybe a short-term rate and a slightly longer-term rate. Those 2 and 3 year rates will start to look really attractive when they get below 5%.